Monday, October 10th, market analysis, Stan Ehrlich. Welcome back. I was gone for 1 week, a little vacation. Let's get started here. Boy, oh boy, what a week change will make. Wow. On Monday of last week, the market rallied sharply after a very bad previous September 30th Friday close in new low ground, and I'm talking the S&P 500. I always start with the spider. It's the most popular probably index there is, taking over the Dow Jones for many decades. So on last Friday's market, we closed very poorly, new low ground, but last Monday it opened a bit higher, rallied substantially, and then gapped up on Tuesday of last week, creating a gap. Remember, gaps are almost always closed. On Wednesday, the market had an outside trading range with a lower close, frequently called a bearish engulfing candlestick, typically a bearish candlestick. On Thursday, the market tried to make some new highs but couldn't do it and closed significantly lower. And on Friday, it just dropped like a rock, closing the gap and kept on going down to one of the lowest closes we've seen for the trend down. That's last Friday. Okay, here we are, October 10th. Low and last. Close to the new low for the whole trend down. And now we are not oversold anymore. My custom relative strength index, ERRSI, at the bottom is not below 25. It is not green. We have elbow room to get into lower prices for the trend. This is now officially October. The previous low was actually September 30th, as close as you can get to October. But now we are in the month of October, which usually contains a significant low in the market. If we drop for another few days or sharply for a shorter period of time, we may get oversold. I hope so, and then have a nice rally. Now, out of the month of October, the rally is frequently a month or two in duration and a pretty good size. I am not implying that this is going to be the beginning of any bull move. It is, I think, going to be a rally in a bear trend, in a bear market. Frankly, I expect this bear market to end sometime next spring or summer, and significantly lower than it is now. So, if we were to close right this moment, we have the second lowest close for the trend. Not oversold yet, and there's elbow room again for more downside progress. I have been bearish since the early part of this year. So, I'm not particularly optimistic at the moment, unfortunately. I know a lot of people want me to turn bullish. I just can't do it. I have to call it like I see it. Looking at the 1 minute data for the spider, I don't see anything here except extreme short-term minor oversold condition, which happens often in a single day. And all it does is create bounces that might last 15, 30, an hour or two, and then maybe new low ground, which is exactly what we've seen so far this morning. Nothing there that I can hang my hat on to tell you that the market's about to turn up, except a couple of comments here. We have not made a lower low yet. We are approaching the previous support level, which the market bounced off significantly, 20 plus points. So there is a chance it'll bounce off it again. But I haven't got a lot of other technical tools to tell you that it's going to rally above 380. I don't see it. So I think the October lows and new lows for the whole trend are right in front of us here today, next few days, I'll call a turn when I can see it, but I don't see it yet. Very similar commentary for the DIA, the Dow Jones Industrial ETF, but it is holding up a little bit better. It's close, not as close, but close to the previous lows, and still hanging in there in a little bit of a support area in this several previous lows a couple of weeks ago. Now the QQQs, well, they've done the deal already. They just gave up the ghost. We are in new low ground for the whole trend. New lows since 2 years ago. Okay, and it looks like it's not oversold either. Now I've got some historical support level that we're still in. We bounced off of a week or so ago, just like the other indexes, but it's not working. The support's so far not causing a turn up. So I think we're going to see new lows very quickly. I hope we're going to have a bounce, but I can't even come up with good reasons for it. Sorry. The Russell 2000 is a little bit of a different story. It has actually damn good historical support level that we are in for the last few weeks, and it is the furthest away from making new lows for the whole trend. So it is holding up the best of the whole group. The group meaning the S&P, DIA, and the QQQ. All right, let's look at the October low history real quick. So the green bar here on the far right is the month of October. Last year we had a low early in the month, turned up very nicely. Keep in mind, people, this is weekly bars, not daily data bars. These are weekly bars. Previous year, good October low, again, slightly early in 2019. That is 2019. 2018, still in October. If you had bought in 17 rather, you would have made money, but there wasn't a particular low. It just kind of went up slowly and then started to accelerate faster. Previous year, excellent. Previous year, okay, not the greatest example. And on. The research I've done goes back at least 30 years. The odds of having a low of some significance for a month or two, that would be November, December-ish, is about 80 to the low 90 percentile. Very high. So I am very much going to scream bloody murder when I think we've got the day that the market is going to turn up, and I think it's going to be this month. But again, we've got 2/3 of the month in front of us, and we're almost in new low ground in the spider, very, very close. Next, interest rates, a major factor these days in causing the market to continue to be bearish. We have a new low for the bond continuation contract today. That new low means new highs in interest rates. A good buy signal that I got on September 28th lasted 4 days, had a nice significant profit available, and now it's failed, but you should have, could have, would have taken a profit. And we're seeing the market make lower lows and not oversold again. So I cannot justify it turning back up again yet. It just doesn't add up. I think we're going to go lower in the bond continuation contract. I don't see any turn at this particular point. I had a great sell signal back on August 2nd that worked extremely well, and a whopping great buy signal June 16th of this year. So these signals do provide significant turning points in the market to the exact day, and I call them the ER signals, Ehrlich reversal signals, and they are based upon a custom relative strength indicator as well as a customized candlestick, bullish and bearish candlesticks. Those two things, along with a few other little nuances, generate my green and red daily price bars, which are the signals. If they don't work, I am out very quickly and have small losses. When they do work, You can see we have fantastic trades frequently, like on the 10-year note, which had an August 2nd of this year sell signal around 121, and we just got out a couple of weeks ago around 111, 12. Nice, great trade. Let's look at some futures markets. I had a good buy signal again in the indexes, the Dow futures, the E-mini, the YM, but it's not holding. It's starting to threaten the buy signal that we had on the 30th, October 3rd, last Monday. That's the futures contract. The actual DIA did not have a bullish engulfing, so I did not get a buy signal there. The one below it, gold. A lot of people love gold. I got a great buy signal a couple weeks ago on September 28th, and another buy signal a couple of days later. Today is the first day that the signals are being threatened a bit, but they did provide excellent bullish potentials. This is a relatively short-term trading technique, strategy, system, whatever word you want to use. It picks market turning points to the exact day. That's what it was built for. When the signals are good. When they're bad, we do take small losses. Obviously, no system on earth has a 100% profitable track record, period. So, that was gold. Take a look at platinum. We had a buy signal, not quite on the bottom. Sometimes I get them a day or two or three after, tops or bottoms. We had a good sell signal a couple days after the top here, August 15th in platinum. A good buy signal on September 7th. And yesterday, we had a new bearish engulfing ER sell signal, and it is down today significantly, 22.70. So that bearish signal yesterday, that is last Friday, is working just great. We also had on high-grade copper an excellent buy signal on September 28th. That green low right there, and it's doing okay, not the best in the world. Let's look at live cattle, another buy signal, September 29th, doing all right, but I've seen better. And yesterday, meaning previous trading day, Friday, October 7th, we had a new buy signal in soybean meal. So there's some new signals, a couple of weeks old or less, and a couple of them just yesterday. New sell signal, platinum yesterday, and a buy signal in soybean meal yesterday. I want to look at gold for a moment again. This is the bullish engulfing smack dab on the bottom day so far, September 28th. Bullish engulfing. I'm not using candlesticks because I've been doing this for over half a century, and I like vertical bar charts better than candlesticks. So the exact same data, they're just depicted a bit differently, but they provide the same information: open, high, low, close. All right, lastly, forex. The euro dollar gave me a buy signal on, what am I looking at here? The date is, oh, come on, cursor. There we go. September 28th. So far, it led to a 4-day or so sharp rally. Looked pretty nice, and now we're slipping back down again. I think the euro might make new lows for the whole trend. The buy signal lasted several days, quite profitable for those several days. And now my opinion is that we're having big troubles. I think the euro may go down below 95 to the US dollar, maybe to about 90. These lows we have seen in the last couple of weeks are the lowest lows in 20 years. Again, this is not oversold even. I look for oversold conditions and the combination of candlesticks in order to provide my ER signals, which is a historically profitable trading system. Been tracking it for a long time, many years, and I trust it. It looks good, acts good. I understand it. I don't have a signal here. I'm worried that it's going to make a new low for the trend. If you get a buy signal in the euro, you might be getting a sell signal in the dollar index. And I'll mention the foundation for the study of cycles here. You can find some fantastic historical research on rhythms in markets and all kinds of other databases that provide historical rhythms that are extremely useful for a myriad of reasons. The foundation for the study of cycles.com, .org, I believe, actually, sorry. So here we have a rally in the dollar index, which equals the decline in the euro dollar, and they match. Sell signal on the same day we got a buy signal, and they're inverted. So it doesn't look like we're out of the woods at all. I'll go back to my indexes real quick. While I've been talking for the last 7 minutes or so, we have a little bounce, but it's little. Nothing of consequence. My major long-term for this year, as I stated earlier in the year, I meant to say, is actually 340. And I can justify lower than that for the bottom of the bear market, which again I think may be in spring or summer of next year. So I'll leave you with that. No particular great enthusiastic bullish commentary, I'm sorry to say, but I call it like I see it. Thanks a lot. Have a great trading day. Stan Ehrlich. Bye-bye. Till tomorrow.